Coming up on Market to Market. In the shadow of a lawsuit, farmers brief officials on water quality improvement projects. And one Midwest entrepreneur works to revive an Old West icon. Those stories and market analysis with Ted Seifried next.
Funding for Market to Market is provided by Grinnell Mutual. You think differently about a customer when you stand in the middle of his dreams. We work to make sure you get covered right. Grinnell Mutual, a policy of working together. Information on finding an agent near you is available at grinnellmutual.com. This is the Friday, May 6th edition of Market to Market, the weekly journal of rural America.
Hello, I'm Mike Pearson. More signs the economic recovery is slowing its roll were evident this week. According to the Commerce Department, unemployment held steady at 5%. However, the number of jobs created in April hit a 7-month low of 160,000. Now, that news helped push the Dow Jones Industrial Average higher on Friday, but down more than 150 points from Tuesday's top. And the Midwest Business Conditions Index, a 9-state economic snapshot, managed to remain above growth neutral, but stepped backward by nearly half a point to 50.1. This year, USDA will enroll more than 800,000 acres in the Conservation Reserve Program. The sequestered sensitive acres have benefits beyond controlling erosion. According to USDA, nearly 47 million metric tons of CO2 have been captured by the fallow acres over the past 5 years. While these inactive acres help keep a farmer's most precious resource from washing away, millions of active crop acres remain embroiled in a legal battle over runoff. A courtroom showdown for the landmark Iowa lawsuit over nitrate pollution has been put on hold. But this hasn't stopped farmers who want to keep legislators off their land from showing they are good stewards. Paul Yeager reports.
You know, each situation is a little different, and you find out different techniques.
Iowa's governor and Secretary of Agriculture toured a wetland this week near the epicenter of what's already been called a monumental lawsuit over water pollution. This 7.5-acre wetland is located in Pocahontas County, an area that borders all 3 of the counties involved in a legal battle over drinking water. This wetland was constructed at the end of a drainage district in an effort to purify its output. Researchers at Iowa State University teamed with the Iowa Department of Agriculture and Land Stewardship for the pilot project. The efforts included using plant vegetation to help filter nitrates out of the water.
Yeah, wetlands are a great tool, and there are some urban sewage treatment plants using, in fact, that's really where some of the technology came from to say, okay, if that'll work to reduce nitrogen and phosphorus out of treatment plants, let's figure out if we can do the same thing with tile water.
Bill and I both have been working on this for a number of years, and closing these drainage wells and going to a better system, and then at the same time with the nutrient reduction strategy.
Governor Branstad said he's toured several Iowa counties implementing different conservation strategies like cover crops and bioreactors. Water quality improvement legislation stalled in the Iowa legislature this session, while the Des Moines Waterworks lawsuit looms overhead. Close to $15 million has been spent on pilot projects in Iowa as part of a combined effort between producers and government programs. Some Iowa farmers are voluntarily trying to limit agricultural runoff as part of Iowa's nutrient reduction strategy, which seeks to curtail the state's nitrogen and phosphorus output to waterways by 45%.
We're building a nice base of activity, certainly with the practices in the farms, as well as these edge-of-field practices, looking at wetlands, but just very, very early in the process. When we look at the amount of crop production that's here in Iowa, it's going to take a lot of effort in a lot of different places. So just a good start. In fact, really it's a challenge to, when you look at the variability of the weather, to even be able to see the year-to-year differences that our additional practices are making yet.
For Market to Market, I'm Paul Yeager.
Stories are still told about the prairie, black with enormous herds of bison in the days before the plow broke the plains. The source for sustaining life in the West was hunted to the precipice of extinction. Late last month, in a rare moment of bipartisanship, Congress voted to honor the animal integral to the settling of this country. If the president signs the bill, the bison will become the nation's first official mammal. But work has already begun to add to the herds of this majestic animal. And late last fall, producer Josh Bittner found one farmer on a quest to revive this Old West icon.
It's been said that good fences make good neighbors. But for one Nebraskan, these fortifications are a gateway to his vision of restoring magnificence to the Great Plains.
The bull, especially the bulls, they're so majestic. The way they walk, they just kind of, they're the boss. And they're just kind of the king of the prairie, like the lion is the king of the jungle,
Watertown Bison Ranch in Amherst, Nebraska is where Dave Klingelhofer and his family house more than 150 head of bovine behemoths, which can stand 6 feet tall and weigh up to a ton.
We were going to buy 2 calves, 1 for each grandson, and we came home with 11. So I guess we got in it that way.
Klingelhofer grew up with 11 siblings on a farm just 5 miles away, raising hogs, cattle, and farming row crops most of his life. And his own corn and soybean operation has afforded the opportunity to sow a few hundred acres with seeds from the past.
Yeah, ever since I was a little kid, I've been fascinated with the Wild West. In 4th grade American history, we did a lot of stuff with bison and Indians, and I always liked that.
Estimated at a herd size of 30 to 60 million in North America in the year 1600, bison, or buffalo, as they're known somewhat interchangeably, were hunted to near extinction over a century ago. According to figures from the National Bison Association, by 1900, the American buffalo population had dwindled to less than 1,000 head. But conservation efforts have resulted in a rebound of sorts. Industry trade groups claim 20,000 bison now roam public lands in the U.S. and Canada. And while far short of a stampede comparatively, USDA's 2012 Census of Agriculture adds over 160,000 bison, valued at nearly $95 million, on more than 2,500 private farms and ranches on domestic soil. Government numbers indicate less than 100 private buffalo herds exist in the Cornhusker state, but the modest resurgence has served up niche markets for Watertown Bison Ranch, starting in nearby Kearney.
He kind of approached us and said, hey, listen, we have this bison, we'd like to kind of see how it would work on your menu. And so we've introduced it as a special item, and it's gone over extremely well. So it kind of sells itself. People come in specifically for it, and we've done very well with it. It's local, that excites people, and it's different.
While exotic steaks and burgers spur sales, proponents also tout nutrition, citing the meat's leanness and omega-3 fatty acid content, which they say rivals that of fish.
Bison is a beautiful protein. So bison itself, as we know, is a lower fat ratio than beef. It has a higher iron content, and it is very delicate. No gamey flavor to it. Thanks, Dave.
Klingelhofer attributes potential health benefits of bison consumption to his animal's simple grass diet, which excludes growth hormones and antibiotics.
The difference in a pound of beef and a pound of bison is when you're done frying it, you still have a pound of bison. It's expensive up front, but you actually get what you pay for.
Minimal supplements keep input costs down, but the Buffalo Man says time is a top hurdle. It takes 3 years to get bison to market, but similar ruminants like cattle are ready in less than half the time.
It's a pretty slow process and kind of frustrating a little bit because there's no money coming in. With the beef cattle, you can sell all your calves at one time and get a big check, where these things, it's more of sell 1 or 2 at a time.
Premiums, typically a third or more higher than beef, are the payoff. Consistent price helps lure customers willing to pay $12 to $16 per pound for bison cuts. And the bison farm hopes the extended shelf life of certain cured products can help strike a balance with retail prices.
We've never packaged 1 ounce sticks of jerky before, but it's working well. And it was a challenge, and it's a learning experience a little bit, but it's fun.
When it came time to find a processor, Wahoo Locker was a no-brainer. A small, well-known packer a couple of hours away, Wahoo Locker draws clientele from Nebraska and surrounding states. With a reputation for high-quality meats among mainstream and niche producers, owner Charlie Emsweiler says variety, from the barnyard to wild game, sets Wahoo Locker apart from larger businesses, which handle only one type of animal.
The process is similar to beef. The meat's leaner, therefore it's going to be a lot leaner product and higher in protein and a very healthy snack compared to beef. Beef you can only get so lean, and bison resembles deer in a sense of the leanness, so it makes very good jerky.
In the hunt for ancillary markets, the rancher from Big Red Country aims to borrow from Native American ways by utilizing all parts of each beast. Old West entrepreneurs used buffalo hide to make leather, bones were ground for fertilizer, and manure was burned as a fuel source. In the absence of wood or coal, natives and later settlers used buffalo chips or plains oak to keep warm and cook meals over. And with abundant supply, Klingelhofer draws modern parallels to outdoor enthusiasts.
It burns clean and hot, and it gives off a nice smell.
As opportunities arise and barriers break down, Watertown Bison Ranch will continue its multi-pronged approach to the marketplace. And while working to increase the size of his herd, Klingelhofer hopes this icon of America's past propels his business into the future.
I think as long as we can have a quality product, people get used to the prices, get used to the quality, I think they'll stay with us. I mean, that's going to be our job, is to make sure people are if they're happy, they'll buy it.
For Market to Market, I'm Josh Bittner.
Next, the Market to Market report.
The grain markets were volatile this week on a stronger dollar and higher South American acreage estimates. For the week, the July wheat contract dropped nearly a quarter, while the nearby corn contract declined 14 cents. It was a week of big moves in the soybean complex, with the July contract squeezing out a nickel gain for the week. July meal followed suit, adding $8 per ton. In the softs, the July cotton contract wilted $1.85 per hundredweight. Over in the dairy parlor, June Class 3 milk futures weakened 34 cents. The livestock sector was a bright spot as the June cattle contract jumped $5.80. August feeders put on $6.80, and the June lean hog contract shed 42 cents. In the currency markets, the U.S. dollar index gained 83 points. The June crude oil contract lost $1.26 per barrel. June COMEX gold improved $3.50 per ounce, and the Goldman Sachs Commodity Index was off nearly 11 points, finishing the week at 349.45. Here now to lend us his insight on these and other trends is one of our regular market analysts, Ted Seifried. Ted, welcome back.
Thanks for having me, Mike.
We are glad you were here. I want to start this by looking at the wheat market. Off 25 cents.
Yep.
We got news this week of a big wheat crop. Talk to us about the wheat tour. Is that the only thing driving that market right now?
Is that really news? Is what I want to know. And I actually asked somebody this in the industry yesterday. Look at the crop conditions that we were getting from the USDA. I mean, we saw this coming, or we should have seen this coming. But the answer that I got yesterday was, does anybody really believe the USDA numbers anymore? So, yeah, I guess I can see that. But, you know, this is one of the best wheat crops we've had in a while. And we just got through the old idea of seeing the lowest acreage that we've seen since 1970 in wheat. That is a bullish factor of the market, but not when you're offsetting that with higher yields. So,
and what were the yields? Last year we were 38 bushel.
Yeah, we're well above that. I think we're looking at the best yields that we've seen since 2002.
Geez, okay.
So, you know, we're looking at some really nice yields. Okay. And again, yield is, acreage is one thing, and plus or minus 5 million acres is one thing, but plus or minus 5 million acres is basically plus or minus 5 million or 5 bushels on yield too. So if you have a much better yield than expected, you're offsetting acreage pretty well. So it comes at a time where we're flush with wheat in the world. It comes at a time where we've got a strong dollar, although it did have a setback, but just in the last couple of days it started to come back again. You know, you got to be really worried about our exports and whether we're going to keep up. We had a good export sales week 2 weeks ago. This week wasn't stellar, not even close to stellar, not even close to what we saw the week before. And a lot of that has to do with the dollar rebounding, I believe. So it's a tough news week for the wheat. But again, I think we should have seen that coming, just looking at the crop conditions that we were seeing from the USDA.
And of course, the old saying is you never know what you're going to get on yield until you get into the field. Is there anything that could give us another jolt to the upside in this wheat market before combines start to run?
It's got to come from row crops, I believe. You know, I mean, soybeans are doing as much as they can to try to help add support to the market. But even then, you can see sort of the disconnect happening between corn and wheat versus the soybeans. You know, I just don't really see anything short of a big conflict happening. Again, Russia, Ukraine type thing, something like that, to really give us a big incentive to rally the wheat. Now, that being said, again, if corn starts to go along with soybeans, then maybe you've got that feed alternative aspect. Maybe we can get more demand out of feed. Maybe wheat can come with for something of that nature. But at the moment, I'm not seeing that on the horizon.
Okay, and this week, corn did not make that run with soybeans. We broke 14 cents in the nearby. What does that tell you?
You know, part of that, I believe, is the fact that we're looking at a pretty good pace of progress as far as planting is concerned. We're looking at the fact that we have very good subsoil conditions. So that might be half the battle right there as far as yields. There was a lot of talk about weather being a big problem this year, which it still could be. I mean, we still could be hot and dry at the wrong time for corn. But unlike, say, like 2012, we have good subsoil moisture going into this growing season. And with a lot of the hybrids that we're using today, that sets us up for a very good start. Beyond that, though, you know, you look at just the makeup of the corn market, and you've got funds that have been very willing to go long in soybeans. They just don't seem to be willing to go long in corn, or looking to add to shorts there as they did this week. And then, you know, when we look at the upcoming report that we have on Tuesday, and analysts like myself and other guys, as we start putting together our estimates for this report, we start, you know, putting pencil to paper and trying to figure out what exactly we're going to look at and what sort of ending stocks we're going to have.
Yeah.
Personally, I have not been able to get a corn ending stock below a 2.15 billion bushel number for this upcoming report. Okay. Now, I think, you know, when we start talking about acres and we start talking about yield, that number could come down. But right now, we have to use USDA's trendline yield that they came out with in the Ag Forum back in February, although I've taken a little bit of liberty and lowered it just slightly because my trendline yield is a little bit lower than their trendline yield. But acreage, we got to use the acreage numbers we saw in Perspective
So
Plantings.
you're using 93.5 million acres.
93.6, yes.
93.6,
right.
Okay.
Yeah, so I got to use that acreage number. Again, I took a small, very incremental reduction from that yield number that they used in the forum. And again, whatever I do with demand, I mean, it's just really tough to justify anything below a 2.5 billion bushel carryover for corn. Now, that being said, if we see a number in that realm, along the lines of expectations on this WASDE report, pretty quickly, I mean, it's not going to be, that's not a bullish report by any means. But is it really that bearish? Because I think since we saw that 93.6 million acre acreage number, we've been pretty much factoring a 2.2 billion bushel carryover for corn since that day, right? So if we get that number, then I think pretty quickly we start saying, well, but acreage might be a little less.
Right, then you start having that discussion. Right. Beans on a heck of a rally. Beans, are we going to see corn acres drop?
It was too late to, I think it was too late for beans to buy the acres down south. So I think beans could have bought some acres, not a ton, but some acres on that rally. You also have to factor in some acres that were lost in the Delta.
Sure.
When all is said and done, I think that you are going to see a shift from corn to beans somewhere in the neighborhood of 1 to 2 million acres, but I'm thinking more closer to 1, but possibly up to 2 million acres.
If we get that 2.5 billion bushel ending stock number from WASDE on Tuesday, can we run this corn back to $4?
Well, 2.15, not 2.5.
2.15.
A big difference there. But if we see a 2.5 billion bushel carryover from the USDA, then we have to start looking at new lows, because I don't think that that sort of numbers entered anybody's mind. But if we see something in the low 2 billion bushel carryover number, which isn't unfamiliar to us. I mean, we've seen that a couple of years now, where we've talked about a 2 billion bushel carryover. At that point, yes, I think that does allow us to say, okay, but, and start talking about acres, start talking about yield and what the weather might look like. And it gives us an opportunity to maybe look at other things.
Okay.
So it's possible. I don't think a run to $4 happens or well above $4 happens. 440 has really been my target for a rally here, either spring and into summer. That I think needs to take some weather.
Okay.
I think we need to see some weather from that.
Well, now, speaking of kept on moving, we've got soybeans continued, added another nickel on this week after a volatile Thursday into Friday trading session. Yeah. Does that inspire you that we could keep this rally running for another week or so?
Well, until today. You look at what we did yesterday, the reversal off the highs. We've done that twice now in soybeans. Reversal lower off the highs after making a new recent high and then closing below the previous day's low. It's not technically a key reversal because we didn't set new contract highs, but it's new recent highs, new highs for the year. And that's a pretty good sell signal. And then to answer it with a day like we've had today, where we had a much stronger day here today, it all comes back down, in my opinion, to that soybean meal.
Okay.
You look at the meal strength that we've seen today and on this run the whole way, I think that's the market's telling us that we don't have the meal stocks we need quite yet. We need to see that crush roll along for a little bit more period of time, because I do believe the crush has been ramped up now that we've improved crush margins so dramatically here over the past 3-4 weeks. It just takes a little bit of time to get those stocks in place.
Okay.
So I don't know if we're quite done yet, but I do think from a fundamental perspective, we should be getting to a top in soybeans in this general area. We'll see what the report says on Tuesday. If old crop numbers are a lot tighter than expected, maybe we get another leg. If not, though, I think we're kind of topping out in this area simply because we have the beans to crush. This isn't 2 years ago where we ran out of soybeans, crush dropped to 10-year lows.
We have ample supplies.
We have, and the crushers in particular are the ones that own those supplies.
You bet.
So they've done very well on this rally, and that crush will increase dramatically.
Okay, well, let's talk livestock. We finally had some black ink in the live cattle sector.
Yeah.
$5.80 to the upside on the week.
Yeah.
Can we keep this strength going?
The cash strength, I think, has kind of followed the futures. And if you look at what June live cattle did, we kind of had that sort of double bottom area, although they didn't line up perfectly, but we had a bit of a double bottom area at the 114 level. And since then, we've had a really nice bounce from that. I think cash is now kind of following that. But now we look at fundamentals, and the big talk 6 weeks ago, again, we were talking about this last time I was on the panel. Weights were significantly higher than last year. 6 weeks ago, we were 25 pounds over year. Now we're only about 4. We dropped 8 last week. So in the short term, you worry a little bit about that little bit of tightness in supply. So I think there's good reason to be somewhat optimistic in the short run. Longer term, though, they still have placement numbers that are well above last year. So even if we don't have the higher weights, if we can keep weights at or near where last year's level, but we have the cattle placed on feeds and we have that coming up further down the curve, you wonder if we get a healthy bounce here, better than what we've seen so far.
Okay.
I'm still looking for. I think the bounce we've had is about half of what we're going to get.
Okay.
And
so you're looking at us up into the mid 130s.
130, yeah, mid to lower 130. 134 is a number that I've been talking about all year. That's kind of my target on a bounce. Okay, but longer down the curve, you wonder if that is a sustainable rally or if that's just a bigger bounce in an overall newly established downtrending market.
Okay, as we look at this downtrending market, we've got a question from one of our viewers on Facebook. This is from Tim in Cloutier, Iowa. He works at a livestock sale barn. He says, where's the feeder calf market going to do? As we look at this long-term downturn, feeders on that trend already?
Yeah, I'm less friendly on the feeder market because of the placements. I mean, we've basically given incentive to add placements. Now that we've done that, I don't know if that incentive still needs to be there. So I'm a little bit more friendly live cattle than I am feeder, but overall I do think we can have a shorter term rising tide in both cattle markets. Longer term, I'm a little worried about the downside potential that we still have out there.
Okay. Longer term, looking out for the remainder of this year, next year?
Yeah, 4 to 6 to 9 months out.
Okay.
If it takes that long. Because again, keep in mind, we trade futures, not today's, right? So, we're always trying to think 1 or 2 or 3 steps ahead of what the market's going to do. So in the near term, again, I felt like we needed to see a bounce. I thought 114 was a likely area to do it, especially when we put that double bottom in. I think we can get a bit more of a bounce, but I think this is a bounce that is a selling opportunity for producers in general.
All right. Lean hogs.
Hogs.
Down a little bit on the week.
Yep.
Still up into the 80s on the nearbys. What does the future look like in the lean hog market?
New highs in July's. We got excited about some export sales to China. We've been talking about that for almost 2 years now, looking for that. We talked about the Chinese reducing their herd by 6% or so, and that they were going to need to make up for that from demand from us, or production from us. It's good to see that number in there. But this week we came off those highs because we really didn't see that sort of follow-up. And the question really remains, is that a flash in the pan, or is that something that's going to carry on here over time? I think there will be a little bit of that, but I think we might have got our hopes up a little bit too high for what we might be seeing out of that. So I'm a little concerned that what we just saw was a bit of a double topping sort of formation in the hogs. I am optimistic, cautiously optimistic, that we're going to go try those highs again and maybe see what we can do with that. If we can get over it, it would really help to see some bigger exports again going to China. That would really get us excited, and that would certainly get your speculative trader excited again.
But if we don't, make some sales.
If we don't, that's, we're looking at a place to be making some sales. The bigger concern that I have in hogs is if beef prices are coming down, domestically and abroad, do we lose some demand there? Because while beef demand is fairly inelastic, pork demand is really
Perfect, Ted, and we will pick that up in the Market Plus section.
Perfect.
Thanks for joining us this week.
Always a pleasure, Mike.
That wraps up the broadcast portion of Market to Market, but Ted and I will keep the market discussion going and answer more of your questions during Market Plus, which is available on our website. And seek us out on Facebook. You'll find links to some of our videos, and you never know when we might go live for a behind-the-scenes report. And join us again next week. We'll take a closer look at the commodity markets watchdog. So until then, thanks for watching. I'm Mike Pearson. Have a great week.
Market to Market is a production of Iowa Public Television, which is solely responsible for its content. Funding for Market to Market is provided by Grinnell Mutual. You think differently about a customer when you stand in the middle of his dreams. We work to make sure you get covered right. Grinnell Mutual, a policy of working together. Information on finding an agent near you is available at grinnellmutual.com.